All right, we're back. Citi is our chart of the day. It's rallying today after it said it's going to buy back roughly $500 million worth of shares in Q4. So revenue expected to be at the lower end of guidance, right? We know that. Expenses down in aggregate. What's your take on this stock that you own?
Well, I'm happy to hear the buybacks, and that's a central part of the story at Citigroup, but it's also been in question recently because some of their capital ratios, there's been a concern that maybe they wouldn't buy back as many shares. So you get news like this and you like it. However, it's also gravy on the overall meal that Ms. Fraser, Jane Fraser, the CEO of Citigroup, is serving us up, which is that she has finally addressed the low return on equity at Citigroup by cutting costs. And in the last several months, you've seen the stock rise about 19%. That's primarily because they're cutting 5 layers of management. I just want to think about that for a second. 5 layers of management? I mean, how many layers of management were they? This is kind of incredible. Ms. Fraser got absolutely no honeymoon when she took over the helm about 2.5 years ago. She first wanted to right-size the bank with regards to getting rid of international operations. I think that's mostly done right now. Still a little Mexico situation to deal with. That will take time. However, she's doing all the right things now, cutting costs, getting the buybacks going. I like to see the surge in the shares here.
What do you think, Anastasia, about the sector, which is tracking for its 6th straight weekly gain? That's the first time since May of 19.
Yeah, it's been a huge rebound for the sector. Obviously, everything that didn't work for it earlier in Q3 was working in November. You've got rates lower, you've got soft landing hopes higher. And, you know, look, financials are going to perform well if we are going into a rate cut environment. Again, looking at the top performing sectors in that 6 months, red zone, so to speak, it's infotech followed by financials. So they can perform well, but personally, I still have my hesitation because if you think about the sector that is most vulnerable to taking credit losses, it is the financials. And we know defaults are rising. We know delinquencies are rising. We know bankruptcies are rising as well. And I think that's the sector that has to absorb it is the financials. So if I could have my preference for now, I would stick with a cleaner story, which I think is tech.
Joe, the other thing that's been rising, regulations, much to the unhappiness of the bank CEOs who are down on Capitol Hill again today complaining about it.
Yes.
How much does that hamper what bank stocks can do from here? The regulations that they themselves are telling you are no good, but they don't seem to be, Basel III doesn't seem to be going away. It's not going to go away.
I believe it's been hampering financials and in particular money center banks for the better part of the last decade. So I think it's already impacting them. I think when I look at money center banks, I look towards specifically Morgan Stanley and Bank of America. I have remorse because I liquidated positions that I had maintained for the better part of many years in both of those names. I like the wealth management businesses for each of those entities. I'm looking to get back in. I've played JP Morgan very well throughout the entirety of 2023, but I want to be a little bit of a seller of some JP Morgan. I want to go back into Morgan Stanley and Goldman Sachs. And the last point on why.
You think capital markets coming back?
Well, I like the fact that I think in an environment like we've just witnessed, that their trading revenue, I think, can excel. I think they're better at it. I was a little disappointed to hear the Citibank CFO talk about how because commodities and fixed income opportunities aren't there, that the revenue's down significantly. That's discouraging. It's one of the reasons why I don't want to own Citi.
If I can just really quickly, it's a good point, but I do want to point out that Citi's really, their crown jewels are security services and treasury, doing corporate cash management. And the reason I bring this up is because people a lot of times will compare Citi to JP Morgan. I understand they're both big financials. They're really doing different things.
Jason Snipe, you own Goldman, which Joe was talking about.
Yeah. So for me, I think it's completely idiosyncratic as it relates to financials. I think, Anastasia makes a really important point on credit quality of the consumer. So for me, as rates do come on, I think it's a bellwether for financials, but in particular, it's going to be capital markets. So that's why I like Goldman Sachs and some of the IB players, because I think that's where the yield will come from.
I think if you were to buy a call option on financials, you're buying a call option on capital market activity recovering. That was what really didn't play out in the fall of this year as everybody expected. But if you do have rates coming down and capital market activity picking up, financials like Goldman and others will certainly benefit a lot.